Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond over at the Contrarian Trader. It is 12:19, 5 a.m. in the morning. What the heck are we doing up on the East Coast? Uh, Good morning, everyone. For the first time since the 1990s, and I remember it vividly, we wake up and we have a president that has been impeached from office. But this time, uh, it's more akin to a coup d'etat than anything else. It's really, really scary stuff that we're looking at here. It doesn't matter what side of the aisle that you're on, but the way that the president has been treated since before entering office has been just simply mind boggling. And no matter how much the charges against him are thrown out, discredited, they just keep coming back for more. It's like Groundhog Day, and it just doesn't seem to end. So I don't think it matters what side of the aisle you're on, whether you like him, whether you don't like him. The man was legitimately elected president of these United States, and we see nothing but absolute, and they don't care what you think, absolute corruption in Washington. And I don't think it's going to have one bit of an impact on the markets. He's not going to be voted out of office in the Senate, or convicted in the Senate, I should say. So this will just be a reason for the Dems to say that he shouldn't be reelected during the general election. And he was out there last night campaigning, shrugging this off. And the vote was mostly along party lines. Tulsi Gabbard, who is the rising star on the political scene on the Democratic side, although they hate her, the Dems hate her. She's a Democrat, very, very liberal, but she's a war hero. And she voted as Obama used to do, not present, not willing to choose a side. So that is a black hash mark on her sleeve, pardon the pun. So, I think this is a nothing burger for the most part. Another article on Zero Hedge. The U.S. stock market hasn't been this rich and overbought since 1933. This is a source from CNN. I'm shocked that CNN is posting anything. I don't know how much credit to give it, but it's out there. I would need to take a look at my own data before I ever went with any type of data submitted to us for reference by CNN. What's really concerning here for me is the S&P 500 and the divergence that we're seeing. And this goes all the way back to the 1930s. The divergence that we're seeing on S&P 500 price relative to the RSI, which is diverging somewhat. Global liquidity. I mean, you could say that it's a China trade deal that's causing these markets to proceed higher. Good morning, Mila. But in reality, we've been talking about this. It's global liquidity. It's the global pump and dump that is occurring. These are all central banks pumping up in blue these markets with liquidity, and the S&P 500 is following suit. There's no reason to think that it's going to stop anytime soon. I was very, very tempted yesterday to go adding to a short position of this market, and I held off out of discipline because of seasonality. This time of year is typically a very, very bullish time of year, very light volume, and generally managed by computers. And I said, what's the sense? They'll just keep melting it up higher on very, very thin volume. What January brings, different story, because there's a chart out there, and I'm going to reference it now. There's a chart out there that, to me, is very concerning. This is the 10-year yield. And we have as of yesterday, a new weekly high on the 10-year yield. Week over week, we are making higher highs. We have broken out above this upper band of resistance. In short, despite the Fed intervention in these markets, the bond market with liquidity, yields are going higher. Not good for the market, not good for the economy. And this chart appears as though it wants to go higher. So we'll see how we close out today's trade at some point in time. Well, the president's already begun it. The president has begun hammering away at Jay Powell to cut rates, which I don't see him intervening anytime soon between now and the next Fed meeting. He also wants him to try to act on weakening the U.S. dollar. There's no doubt that on a weekly basis, the dollar is looking fairly strong. At some point in time, the markets are going to take notice of this breakout on yields. As long as we keep a one handle on the 10-year, I think that the markets can continue to melt up. Once we start closing above a two handle on the 10-year, I think conversation will be had about whether or not these markets can sustain ever-rising yields. Now, when you take a look at this other chart, and I'm going to go over this tonight on Thursday Night Stock Market Futures Live. I'm going to go live at 6 p.m. Eastern Standard Time, as I do on most Thursday nights. And what we do is we go over the weekly charts, and we review how we appear to be closing out the week. And that provides us an opportunity to say, okay, identify what positions we might want to be long or short of moving into the following week. What must the markets do on Friday for us to get long or short of the markets or individual names? So join us, please, 6 p.m. Eastern Standard Time tonight, live. And I have a whole bunch of charts I'm going to go over, in particular, Bitcoin and correlations for Bitcoin. I'm going to go over that chart in a moment because Bitcoin ripped yesterday. And we are currently long of Bitcoin, so good for us. What else? Oh, yeah. There's a link below. If you're currently not getting alerted when I'm about to go live, 15-minute alert, just please click that link below. It's a VIP link to our email list. You'll get alerted 15 minutes before I go live. So get that. You will not be spammed. You'll probably get some emails with regard to certain videos I put out that are free. And you can always opt out if you don't want them. Okay, so the chart I was going to was this chart here. And then I'll go to the pre-market futures. We'll keep it brief this morning. So this is the 2-year versus 10-year Treasury. I'm sorry, yield curve. Yield curve. Please, I gotta have another sip of coffee. Oh, good. This is my Christmas mug, my Charlie Brown's Christmas mug, with the spirit of the season. Okay, so this is a critical chart because when you take a look at the yield curve, for those not familiar with the yield curve is when you have short-term yields yielding more than long-term yields. Typically not the case, not supposed to happen. And when the yield curve inverts, as it did back here, since August already, that's a big problem. That's telling you that you have short-term yields yielding more. It's a signal that we may be entering a recession. The Federal Reserve is so corrupted, the yield curve right now, with their actions that you don't know what's truly the actual yield on the curve. So back in August, we inverted, and we are now steepening. Why does that cause a problem? Well, for the markets, it causes a problem not when the yield curve inverts and the stock market continue to rally. It's when it steepens. It's when you have a correction of that yield curve, meaning things appear in the bond market to be becoming more normal. Short-term yields are yielding less than longer-term yields, but it's during that steepening process where the stock market takes it on the chin and rolls over. You have the S&P 500 here overlaid in blue. Take note of when you have a steepening of the yield curve. The S&P 500 rolls over, like back here, same deal. Let's pull back. Let's bring in some more yield curve events. We'll go to, 40-year view. If I can get my mouse under control here. 45, fine. So here you have it. Steepening of the yield curve, stock market rolls over. Steepening of the yield curve, stock market. Didn't roll over all that much back here, but it did roll over. This was the dot-com crash. Obviously, stock market rolled over. Let's drill back down. And these gray areas are all, this wasn't a recession. This was a recession. This was a recession. This was a recession. This was not a recession. Let's drill back down again. And then we'll go to the pre-market activity. All right, so what you're seeing here is the yield curve steepening. And I've been committed to this opinion, but I'm open to be convinced that I may be incorrect. That I thought that we would fail, that we would get rejected here, and we would break this lower band of support, thus putting in a double bottom setup on the yield curve, like back here. You had a W formation, then we had the steepening. W formation, then we had the steepening. We don't have that yet. So it was my expectation that we would break and move lower. But in reality, at current, we are piercing the upper band of resistance of what I divined as being a bear flag setup. The month isn't over yet, but we need to say that, you know what, we could be wrong here, and that this yield curve may in fact be steepening. But again, we want to keep an open mind. Here's our breakout. Now, if we close out the month of December above this resistance level, it's not going to bode well for stocks going into January. If we break down below this lower band of support, we'll probably keep a bid under the markets. Hey, Sam, good morning. To be clear, Bob, $3 billion of debt first session, $20 billion demand. So I thought to sell another $4 billion in debt. Now the Prime Minister said we have $3 billion of extra money. They define that extra money is being the extra debt is being money. Yeah, there's a clear. You don't have to. You don't not have to have a college education not to know what money is versus debt. Strange. Good morning, by the way, Sam, if I didn't say that already. All right, let's go to the pre-market activity. All right, we'll kick things off with the NASDAQ. It looked as though yesterday afternoon we were giving up ground. And on a daily chart, there's no doubt about it. You're seeing topping action on the major averages. I went over that with members last night on Market Wrap. And this morning, though, you're seeing the NASDAQ flat. We're pulling back a little bit here, but we're flat on the session. The S&P 500, again, flat. We're holding that 20-period moving average in blue. It appears as though they will try to melt us up higher. I will point out the 3,200 level on the S&P 500 has been very, very serious battleground of late, meaning they've been trying to defend it. Bears are trying to bring the markets down below it. So watch the 3,200 mark. There's definitely a battle going on at that level, and you can see that we're straddling that 3,200 mark even as I speak. Going to the Russell small caps. The Russell's down slightly, but flat in the morning. This could easily go positive in a heartbeat. So I could have all the reasons in the world, technically, to say that this market will break down. Seasonality is very, very powerful this time of year. The dollar, I spoke about this yesterday morning, about the dollar forming a bull flag, uh, not a bull flag setup, an ascending wedge formation. And I was concerned about it breaking down on a 4-hour basis. And that's exactly what happened overnight. We broke down below this lower band of support on the US dollar. We had rallied off of an oversold condition, a good rally. We hit resistance, then we backed off. You can see they're trying to put a bid under it right now. But the dollar is definitely coming under a bit of pressure. If you take a look at a weekly chart, the weekly chart looks good. But it doesn't take into account this price action. You're trying to calculate the interest on U.S. debt? The U.S., are we broke? Oh, we're broke. There's no doubt about it. All the Western economies are broke. They're absolutely bankrupt. We can't even get a proper audit of our Federal Reserve or of our gold holdings here in the States. All right, so the dollar under pressure here this morning. Bitcoin. That's why we own the gold miners, Sam. There's going to be a day of reckoning coming. All right, so Bitcoin, we've been speaking a lot about. We expected a rally. We got the rally. Big move higher yesterday. Nice consolidation overnight of those gains, and it appears as though we're going to press higher here. Yeah, we bought back, where was last Sunday? Saturday, right here. We bought right back here. On the breakout and then a pullback and a retest. And then we still got the pullback to an extreme support level. Reversal bar here yesterday, and then it was off to the races for Bitcoin. Now, I'm going to go over Bitcoin in great detail tonight to show the correlation between Bitcoin and inflation. Let's take a look at nat gas. Nat gas, very similar to the dollar. We spoke about this yesterday. Was oversold, dead cat bounce, broke support. Are we consolidating here? Not quite sure. The markets will tell us. We may be putting in a higher low here, but nothing to trade off of, just something to watch. What else do we have? Bonds. Bonds are getting annihilated. Here is my flex grid view of the markets and what I'm looking at. So here is a beautiful consolidation on gold. We're looking for a breakout here, but it becomes difficult for gold to break out when you have a strong, this is the E-mini futures here on this screen. It becomes difficult for gold to break out when you have a risk-on environment. Now, over here is a 10-year Treasury bond price, and I'm looking for a bid here on bonds, weakness on the S&Ps, and that should send gold higher. But we just can't seem to get our act together to break out of this channel. I think it's going to happen fairly soon. It may take until January, so we continue to sell covered calls against our gold mining position, generating income. Now, in the middle here, you have the dollar, the Dixie, and that is obviously breaking down some. This is on a 15-minute view. You could see we were in a triangle formation. We broke that triangle formation, drilling down. Here's a dead cat bounce, and we're breaking on a 4-hour basis. S&Ps, the needle is stuck at 3,200. It's amazing. Bonds trying to catch a bid here. A mess. I want to take a look at home heating oil. I continue to look for signs of inflation. I don't care whether it's at the energy level, the food level, on any level. The Federal Reserve, they have the ability to ignore food and energy because they make the rules. Energy is looking good here. This is oil. This is not home heating oil. I'm going to go to home heating oil now because I ordered another full tank of home heating oil. And I'm going to pull back to show on a weekly view, if I can find it here. Light sweet crude. Let's go out to a weekly view. That's daily. Here's the weekly view. Let's clean this up. Okay. Here's your breakout. And this is what we're going to talk about tonight, is evidence that we have inflation. Again, the Federal Reserve may not want to acknowledge that energy is in fact inflationary when it proceeds higher. We do. We're breaking out here on light sweet crude. Home heating oil, as I mentioned before, man, we are breaking out here in a very, very big way on home heating oil. Take note of the breakout here above this long-term upper band of resistance. This now becomes support. This now becomes support. It's undeniable. We're breaking out on home heating oil, and this is all very, very inflationary. I'm getting a little bit long here. I can go through these charts all morning long, but I appreciate that everybody needs to get to work. Corn. You know, who doesn't eat corn, right? Corn breaking out. We have higher lows here on corn. What else? Wheat. Jesus Christ. Look at this. Wheat breaking out. So the next time you're speaking to somebody, probably a government official that's saying there's no inflation out there, look no further than these charts, folks. We're breaking out big time on food, energy. Hogs. Breaking out. So protein, ag, all breaking out here. So if you wonder why Bitcoin is rallying, look no further than the charts I just showed you. Take a look at this reversal bar. And tonight on Thursday Night Stock Market Futures Live, I'm going to be showing you the correlation. So please join us there. Let's go to, let's see what else we have here. Does anybody else want to see any more of these? Or am I boring the heck out of you? Copper, Dr. Copper. So they want to back out food and energy. What about metals? Copper moving up higher. It has been moving up. It broke out back here. $11. Not at all. Very interesting. Cool. Sam, copper and yield would be in tandem. Yeah. Yeah, it looks that way. You know, just to touch upon that, you know, Sam just made a comment that yields in copper can rally together, and that's true. You can have yields move up higher if you have organic growth in the economy. What we have right now is not organic growth, it's manipulated growth. So if you showed me a GDP number that was based upon an economy that was booming due to manufacturing here in the States, then I'm with you all the way. But if you're showing me an economy that's based solely on the Federal Reserve and the manipulation of monetary policy, you know, any type of GDP growth that you get out of that is simply a goose, and it's just not going to last. We're playing with fire here. Let's take a look at cattle. Cattle weekly basis. We have clearly broken out on cattle. We have resistance immediately above. Not immediately, close above. What else do we have here? Coffee? No, that's not working. Okay. What else? Lumber. Let's take a look at lumber. Lumber has broken out. We're looking for a continuation move higher out. It looks like we're getting a resumption of the breakout, which began here in October. We broke out, rallied, consolidated. We're breaking out yet again, forming the right side of this cup. It's out there, folks. Prices are moving up higher. Undeniable. Take a look at coffee. I couldn't bring up coffee. Thinkorswim, they had a fight with their data provider. And some of the commodities, you could see them filtering in more and more. They're coming back. But when you click on coffee, can't find the symbol. I inquired about that. What I could do is this. Always a workaround. This is a daily chart. Let's go to wow, look at this breakout here. This is a monthly chart, folks. At current, we have a monthly breakout on coffee. Amazing. LK symbol is coffee, Chinese stock. LK? This is a winner. This is Chinese mainland stock? Strong stock, consolidating gains. Clearly broken out here. YEAG? What does that stand? That a symbol? Looks like we're going to break out here. We're consolidating very nicely. Yep. We're going to break out here. Higher lows. Chart looks good. All right, guys. With that, folks, join us tonight, Thursday Night Stock Market Futures Live. Please join us there, 6 p.m. Eastern Standard Time. If you could give us a like, I'd appreciate it. Everybody have a profitable trading day, and I will talk to you soon. Be well. Take care, Sam. 6 p.m. Eastern Standard Time tonight, Mila. Take care, folks.